Hi there, Chad here with Living the Dream Real Estate Group. And today on the podcast, we have brought back our mortgage panel, our mortgage lenders and specialists, and we're going to be talking everything to do with mortgages. Well, not everything, but we are going to be talking about what we saw in the announcement this last week from the Bank of Canada. We are going to be touching on things that we need to be thinking about, some ways that we can strategize about our mortgages. We're all feeling the pinch. We are seeing the rates and they are starting to take hold, and it is getting difficult. So we've got some stories that come from our on the line front lines, our mortgage brokers that are talking about some of the stories that they're hearing and some of the things that we can be doing in preventative measure to keep us on the straight and narrow, especially when it comes to our mortgages. And we're going to be talking about the property transfer tax. Recently, the BC government brought out a new legislative move to change up the property transfer tax that we're paying. So we're going to be touching on that. And just a spoiler alert on that is that we don't have all the answers. We are still waiting for some more consultation that comes from the British Columbia government, just to give us some insight into how that is all going to get rolled out. We talk about that and some new products, especially in leasehold developments that we can be thinking about and getting mindful of. And yeah, lots of really good stuff today in the session. Let's pop into the podcast. Today with us, we have our mortgage brokers section. Some of our panel that's here today, we are missing one of our panelists, Jordan, who is unfortunately away with medical leave right now. But otherwise, we have June Warren and Jeff Shinkuski joining Scott and myself for the Living the Dream podcast. So today we're talking everything to do with mortgages, because this is a thing that we just love to talk about. This is the thing that most of us, for the vast majority of all of us here in life, but in the Okanagan, we are dealing with our wonderful mortgages that we have, and we're all trying to do the best that we can with those. And this last week, we had another announcement that came out with Tiff Macklin and the Bank of Canada, and we had a hold on the present interest rates that we have. And I just wanted to go around because we each put in our predictions. We each said what we were going to do or what we thought was going to happen in this last rate announcement. So June, why don't we start with you? What was your call? What did you think was going to happen this last week?
I predicted it would be a hold. I was hoping it wouldn't be, but or it would decrease. Sorry, but it was a hold.
Yeah. Mm-hmm. Okay, Jeff.
Yeah, it was the same way. I predicted no change. I guess you can't even see that, but no change.
That's okay. No change. Yeah. Mr. Peters?
I wasn't so lucky. My ego took a shot. I was very positive and hopeful that we are going to have a 0.25% drop. It didn't happen, but you know what? I feel like we're working towards that. So that's the positive part to that message.
Yeah. My call was that it was going to be a hold. I have been, and let's dialogue a little bit about why we think it was a hold and what we're thinking for some anticipatory kind of news to this. But I was on a hold on this one, just with what we're seeing in the marketplace, especially with our inflation starting to come down and getting into that wheelhouse of what the Bank of Canada is looking for. That's good. That's positive. What I think that there's a little bit of leeriness of is that looming refi that's coming for so many Canadians that they just want to make sure that they're out ahead of this. And I just don't think that they wanted to get into a spring market, have the rate a rate reduction, and then all of a sudden things just take off like 100 miles an hour, or I should say in Canadian terms, 100 kilometers an hour. That was just my thought, is that it's just too early yet. Thoughts, panel? How about you?
I agree with you. Yeah, I agree with you, Chad. I think that, people are out there, they're buying right now, they're looking. And I think that if they had dropped that even a 0.25 point, it would have they felt it would have encouraged everyone to really get out there and open the floodgates and created a pretty wild spring market. And so not reducing it kept that at bay in their eyes.
Yep. Jeff, how about you?
Yeah, to some consumers, give them an inch, they'll take a mile. And, you look at a prime coming down even by a 0.25 point. Well, now my HELOC monthly payment is a little bit less. So now I have more money. So let's go spend it. And it could just be a really slippery slope. Plus inflation is still north of 3%. Our goal is 2%. So we're not there as much as we think we are and say we're getting closer. We're still above that 3% mark. And Tiff's not going to move. And people just need to know and understand that get rid of your spending. Like only spend on the essentials, especially if you want to see this come down in the next couple of months. Do not do any kind of frivolous spending that you shouldn't. And then hopefully as a nation, we'll get rewarded for it.
Mm-hmm.
Yeah, it's interesting, and this is the whole reason why I lean on these experts that we have here because of those factors. The one thing that I was looking at when we made these initial predictions was that inflation was coming down at a pretty decent rate. It kind of stalled out a little bit, and so that's where I think my positivity in terms of seeing that rate drop was going to happen. Because I felt that inflation was actually going to be a little bit lower when we got into the end of February. Chad, you raise a really good point in the fact that there's a couple of different factors that come into play when it comes to refinancing, because it's how many people are we going to see potentially go into default on their mortgages because of the fact that the rates are still, we'll call them higher realistically over a period of the history. It's not higher, but that's one of the things that I also took into consideration. And so it is a slippery slope because as people are spending more, inflation goes up, but then you have people that are going to enter that default market. So there's a very fine line as to where do these sit and when do we put ourselves into a situation on either side that doesn't help the economy move forward.
Mm-hmm. When we're looking at some of these impacts, because you got to think about this as a whole, is that with all of these rate increases that we've had over the last, couple of years, the pain and the anguish is really starting to dig in, and it's starting to become very real. A take on this is that I was reading a report just recently, and I saw a stat that was kind of alarming to me, is that our missed payment numbers have grown by 130% in last month. I think that was for the month of January, the report. So when we start to see that, we're starting to see all of these, that ratcheting up is now affecting households to a person. Every single one of us is feeling that. So when people are getting to that point now where it's like, okay, what do we do? What are some of the things that people can be thinking about from your perspective as mortgage brokers? Is what can they be putting in or implementing a strategy, or we talked about, really being great savers right now, but what are some strategies that you might give to someone that's saying, you know what, June, we're right up on it. Like, well, what do we do? What are you going to tell somebody? What are we going to share with them?
Oh gosh. Well, going back to the missed payments part, sometimes it's also by accident, right? So automating your payments. This happened to me. My credit card was compromised. So I got a new card and I did not update all of my accounts. And TELUS sent me a lovely email to say, oh, you're a month behind in your payments, which, so making sure that you, it doesn't happen by accident, right? So if you change cards or any of that, you make sure you keep your accounts up to date and have them set to automatically pay the minimum payments. At least just make the minimum payments ahead of time, not on the date that it's due, but prior to. And that will certainly help paying down the bigger debts first, the higher interest rates, using that snowball effect. Is also a good place to start.
How about you, Jeff?
Yeah, I mean, this is a tough topic because pride gets in the way with a lot of this. You get people that have had 800 to 900 perfect score beacon scores, on their credit report, and now they're in the high fives with many delinquencies, and that's just not them, right? And what they just try and do is like, hey, maybe next month it'll get better, maybe next month it'll get better, and paying a credit card with a cash advance from another credit card, like it's just an extremely slippery cycle. So, as a mortgage specialist, our job is to help people with their finances, right? So a lot of my clients are saying, like, what should I do? And I said, well, let's have a meeting and let's see what it looks like. Because sometimes it's not as bad as they think it is. So like, I can't make this, I can't make that. And it's like, well, you have a HELOC that has $50,000 limit on it, you have zero on it, and then you have max credit cards. So what do you think we should do with that, right? And try and get rid of your highest interest payment out there. You tackle the interest payment, you throw it on, say, a HELOC or a personal loan that's, say, half the interest amount. At least you'll feel like you're getting somewhere. I have clients that are just getting second part-time jobs, and as much as you don't want to do that and they don't want to do it, they're like, hey, I'm just going to be a delivery driver for Skip the Dishes, 2 nights a week, or I'm going to go work for Current Taxi 2 nights a week. And, they're doing something that they need to do in order to make the ends meet. And what I also tell the clients is that this is, you rent your rate, you buy your house, right? So let's look at what your rate looks like. If it's like 5.5%, let's try and just do this for 2 or 3 years. And it might be tough, but I tell you, once the rates get down to, say, 3% again, you'll have that much more wisdom in the back of your mind on how.
Did you just go? Oh, there you go. Yeah.
There we go.
Sorry. You'll probably just get better on how to control your finances, and so I think that once their rates do come down and then their current payment is 4,000, now their new payment will be 3,000 in a couple of years, they're going to feel like they're much better. So yeah, it's going to take a little bit of time, but I tell you, it's going to build some character and probably more wisdom to be more proactive in the future.
And one of the things that you touched on there is that when we start to implement the tightening of the belt and not just spending, frivolously, is that we need to be like an elephant when we're reminded of those things, and we keep those things in the back of our minds for everything moving forward. Is just that we set up some principles and set up some ways for us to just make sure that we're being prudent with it going forward, because it's easy. We are so quick to forget on how pain feels sometimes, and it would be very easy to slip into some bad habits. How about Scott? Any other insights that you would have for this?
I think the biggest thing is, and I appreciate what June and Jeff were saying in regards to planning, right? And that to me is the biggest thing, and we talk about that in our industry all the time. Is you don't need to jump to that dream home right away. Everybody wants that dream home, but sometimes there's a stepping stone to get there, and being able to sit down and plan your finances and sit down with a team that's actually going to help you put a plan together. That to me is the key component with all of it. And sometimes we need to settle for a little bit of smaller of a house that we can build some equity in. We can potentially do some renovations to it to gain a little bit more value in it, and use that to leverage that next space. And it's no different with your mortgage. It's right now we're dealing with a little bit higher of a rate that will eventually come down. So what can you do in the short term to deal with a little bit of that pain, but really plan for that 3, 5, 7 years down the road?
Yeah. And you know what? One key thing that I wouldn't want any of you as listeners to forget in this is that we are, as a group, each one of us are here to talk and here to field your questions when you have, some difficult things that you're trying to walk through, or you're in the middle of it. Please reach out. We've got not only this group of a panel that is more than happy to answer a lot of those questions, but we also have a plethora of other professionals that are around us, and that includes investment professionals that can work with the investment side of things that you are in, and accountants. So we do have a well-versed team that is here to assist. So just don't feel like you're on your own, because there's like every one of us is feeling the pinch and feeling the hurt on this. So please do make sure you reach out. So moving on, as we go from one side of things to other things that are impacting our industry in recent months, we've had, at least for all of us here in British Columbia, where most all of us are located, is that we have had some changes, let's call it that have come from our provincial government in the introduction to some new legislation that they launched back in the fall that will restrict some of the short-term rentals and such. And since the last rate announcement, or not the last just even a couple of weeks ago, we had some new announcements that came out from the throne speech from the provincial government that is changing our property transfer tax, our flipping tax, introduction to an increased flipping tax that we now have. But specifically, I wanted to talk about our property transfer tax that had some changes to it. Scott, would you mind just outlining a couple of what those changes are and some of the bigger points that we need to be mindful of with that?
Yeah, absolutely. So initially, first-time home buyer looking at a property or a resale property had a PTT exemption up to $500,000. Since the announcement, they have raised that limit to $835,000, but there's some intricacies in there that we're going to get Jeff and June to talk about, because it's not just a complete exemption. They have also increased any new construction PTT, property transfer tax, from 750 to, I believe it's 1.1 million, if I'm not mistaken.
1.1.
And again, there's some intricacies that come in between those variables as well. So I'll let maybe Jeff, if you wanted to talk to us a little bit about on a resale home, initially that 500,000, and kind of how that impacts a first-time home buyer moving forward now.
To be honest, I'm not 100% well versed on this topic, just because I've worked with two lawyers in the last 2 weeks and I've gotten two different answers. So I like that we're collaborating here. A lot of my clients are calling me and I just tell them, like, this isn't my platform. This isn't my space of my intellect. Please go and see your notary or go to your lawyer first and foremost, because they're the professionals. They're the ones that register. They're the ones that can do your PPT exemption. So I really say, like, hey, like, let's work with the professionals. With that being said, I'll let June speak first if you'd like, and then I'll just chime in on what I do know. But I just don't want to give any false information, because I got two from two different lawyers. I'm like, you got to be kidding me. I'm looking on the websites and like, oh my gosh, there's like a third answer here. So I just want to make sure that we're all speaking the same language here.
Yep.
I am in the same boat as you, Jeff. There is some confusion for sure. I had a closing that was set actually for this week, so March 13th. And those buyers called me and said, our lawyer suggested that we delay our closing till April 2nd. And it was a purchase through a developer, so they were able to do that. And it saved them $15,000 to do it. So that was a great move. It doesn't always work, right? If you're buying a resale from someone else who has another purchase down the line, the domino effect doesn't always work. There is certainly a lot of still some confusion. One thing I have found is that some people believe that the exemption applies, basically that $835,000 purchase, their purchase up to that amount is exempt, and then they pay a little bit on top of that, which is not true. Once you hit that exemption limit, that's it, right? There's a little bit of a scaling piece after that, but it's fairly insignificant. I think there's a lot of clarity we're still waiting for.
Yeah, no, that's one of the challenges. And you know what? I appreciate that we're all a little bit, call it flummoxed with how this has gone in the introduction to some of this new legislation, is that we are still gradually piecing it together and getting more information that comes from the government on it. Is that though that's the case, and though what we see that there's been these changes, how can that benefit some of our first-time purchasers? How can this be of some benefit to those that have been on the sidelines and looking at getting in the market that haven't purchased their first home? Scott, how about you?
Yeah, well, I think the biggest thing is ultimately savings. It's savings on the closing costs, right? That's the biggest thing. We all sit down when we initially start to look for a home, especially as a first-time home buyer. We jump on every single site we can. We're looking at all these fantastic homes. And then the reality sinks in that, we have to sit down with a lender and figure out what can we actually afford to maybe shrink that search down a little bit. And of course, that's what we do. That's what we help them do, is sit down. Let's figure out what makes sense to you. What is not going to put you into a situation where you're spending all this extra money and you don't have anything left in the kitty. And then you have the conversation about the closing costs. And that's the biggest thing that I think comes to as a surprise to a lot of people is, okay, I'm paying this much for my house. I got to have this much for my deposit. And, I have to pay a lawyer or a notary or a conveyancer to close on my house. What do you mean the government wants more money? They want some sort of a tax that I got to pay on top of this. So from a first-time homebuyer perspective, it certainly helps up to a point. I think the government finally took a step back and said, realistically, that $500,000 number didn't make a whole lot of sense because of the cost of housing has just increased that much. My understanding is that in between 500,000 and 835,000 on a resale home, there is a percentage of exemption that sits within there, but it's not completely exempt. So that's some of the clarity that we need to get from the lawyers, the BC government, because I don't think they've fully clarified the whole thing. And but at the end of the day, it is going to help slightly in terms of those closing costs or those end costs that come with the whole picture.
Yeah. So on this, we will be, to you as listeners, we will be getting back to us, or back to all of you when we get some more clarity on what the government is proposed. And I mean, this is one of our challenges, is that we don't have all the answers, but we are always looking to find them. So again, if you have any questions, DM us, DM me, and we will definitely get some more answers on it. So as we look at, and as we start to come to a close on this podcast today, what are some of the things from June and from Jeff? What are some of the products? What are some of the things that you're seeing an increase of in the types of files that you're working with, and some of the products that you're seeing having a lot of success right now with some of your clients? Jeff, how about we go to you?
Yeah, so I got a couple. Thank you, Chad. One thing that BMO prides itself on is our relationship with the First Nations bands. So we are able to lend on a lot of the actual leasehold land in the Okanagan area. So I have found an increase in West Kelowna, West Bank First Nations, Duck Lake Estates, Deer Meadows Estates, all the applications that are coming in now because there's a leasehold. Leasehold is now looking a little bit more attractive to some people, especially investors, because you can, at this time, do a short-term rental potential. And with our leasehold, our rates actually don't change. So you actually will get the same rates as freehold compared to leasehold. And then we're also able to do short-term rental. So anywhere that allows short-term rentals right now throughout Canada, we have a really good short-term rental lending program where we do, it's an extra 5% down, so it's 25% down, but now we can use that short-term rental to go towards the actual application process. And some lenders are taking a step back from short-term rentals, whereas I'm happy to say at this time, March 11th, we are not taking a step back, so we'll just have to wait and see there. But there still is a market, right? You know, I think when one door closes, two more open, and people are now seeing that. So yeah, we're specializing in leasehold financing, and we're still offering some really good short-term rental lending where some lenders say not a chance.
In fact, one of those products that you just brought up, I just had some clients get an accepted offer in at Deer Meadows Estates, a great product of
Absolutely.
prefab homes that are going onto lease land that has become very attractive from not only a rental standpoint, but also from the quality of build that you're going to get with that for its price point. So I think those are some really attractive things that people ought to look at for sure. How about you, June?
Well, I just want to say, Jeff, I think that's fantastic because there are not a lot of other lenders who are lending on short-term rentals or leasehold. It can be really difficult outside of BMO, so I'm really happy to hear that.
Great.
On my end, we're seeing a lot of our other lenders are offering some cashback specials for their spring specials. But mostly what I'm seeing right now, there's always, our first-time home buyers, but a lot of people looking for second mortgages and HELOCs. So like Jeff spoke about earlier, they have a great initial, we'll call it a pandemic rate that has not come up for renewal yet. But they've got some pretty hefty credit card debt or other debts that they need to consolidate and are looking for second mortgages or HELOCs to consolidate that debt and get their payments down. And one of the biggest things is to look at, that's a great short-term solution for today. How's that going to look for renewal, right? So we want to make sure we have a plan that we can actually wrap that all together. But second mortgages, HELOCs, those are pretty popular on my inbox right now.
Awesome. Right on. Well, that is, the lease land is definitely becoming a much more popular destination for folks. And maybe one of these days we'll have to do a session that's just on leasehold land and what's entailed with that, because there is a lot of misconceptions on what it is, what it isn't. And it can be a very valuable asset to have. especially when it comes to somebody that's just getting into the marketplace, because I really do. I'm quite bullish on it at the moment, just because of what it can bring. So, any parting thoughts from our panel today on what you're looking ahead to in the next little bit?
I think for me, and my word to everybody out there listening is plan. We talked about it a lot today, but lean on the people, lean on the professionals, ask questions, be vulnerable. It's okay. It's a non-judgment zone, and it allows you to get more information and help you to plan better for the future, because we never know when rates are going to change. We never know when renewals are going to come up and we're going to be in a pickle, or life circumstances are going to change. So, the best thing you can do is plan, and there's lots of people to lean on to be able to do that.
Yeah. Well, one of the things that that I've been really mindful of in the last while, especially when it comes to first-time purchasers, is a saying that I've heard from my parents and from others in the industry, but from some mentors, is that there's 2 times to buy real estate: 20 years ago and today. And I really do think that once we start to see some rate reductions, and when that happens, we are going to see our market start to go. So one of the things that I have been speaking directly to purchasers that have been anticipating a purchase or thinking about a purchase is to do it sooner than later. Our pricing as it is right now, I think, is still advantageous for folks to get in, even at the present rates. I think that once they're in, they're going to start to see some increase with every one of the rate changes that we see happening in the future. That's just going to help with our values of homes, because that's one of the things that we just can't make more of. Can't make more land. So, especially having a good product, good solid home or a building or structure that's on property that is definitely a great investment to have. So I know we're not financial planners, but I know that is one thing that if you want to be growing in your equity, that is one of the best things you can be doing. And if you do it now, you'll have the chance to get in before the market goes up. After that, you might lose out on that 1%, 2%, 3% of growth that you could have if you were just jumping in a little bit earlier. So, well, panel, just wanted to thank you again for all of your insight and your honesty and openness to share and tell us what you don't know about stuff, because I know there's a lot of things that we're going to be learning. So from now to our next month, when we get together again with our mortgage panel, we will be looking into some of those questions that we had today, especially with regards to the property transfer tax. So please do check in regularly and make sure to ask questions. We have a lot of professionals here, a part of our team and a part of our surrounding team that would just love to be able to help you and make sure that you can get through some of these more difficult times. So for all of you, we are here to help you live your dreams here in the Okanagan. You take care, and we'll talk to you next time.